Hi everyone, and thank you for joining us for our third and final webinar in partnership with Shared Ownership Week. I'm Jade Turnstile from Shared Buy, who are the country's leading property portals specialising in shared ownership homes, and I'll be hosting today's session alongside representatives from Censeo Financial and Alexander JLO Solicitors, who I'll be passing over to shortly. However, before we make a start, I just wanted to play you a short video all about Shared Ownership Week 2020, which will actually be coming to an end tomorrow. So I'm just going to pop this up for you now. Great. So to get things started, I'll be joined by two experts today, Rupi from Censeo Financial and Matt from Alexander JLO Solicitors, who are going to be talking you through the mortgage and legal aspects of buying a shared ownership property. However, just before I pass over to our guest speakers, I wanted to run through some quick housekeeping with you all. So our experts are going to run through their presentations first of all, before opening up to a live Q&A session, which will last for around 10 minutes at the end of the session. So if you have any questions for our experts, feel free to pop them in the chat tool on the right-hand side, where you should see a little icon with some speech bubbles, and we'll get through as many as we can at the end of the session. Also on the right-hand side, it's worth keeping an eye on the offers tab, as we'll be sharing some links with you during the session out to Censeo and AJLO's website. And I also just wanted to let you know that the webinar will be recorded and shared with you after the session. So don't worry if you happen to miss anything or you're not able to catch up and kind of take notes at the same time. We'll make sure you have access to the recording afterwards. That's pretty much it for me for now. I'll be back at the end of the presentations for the Q&A, but in the meantime, I'll pass you over to Rupi from Censeo Financial.
Good afternoon. Thanks for joining us, and thank you, Jade. I've been asked to do a small presentation and take some Q&As later. So off we go. About us, we an award-winning financial services company set up in the City of London about 2007, and over the years we've helped thousands of people moving into their homes. I think right now we probably undertake around 7,000 assessments a year, which turn into mortgages. So we're helping most of London, and it's quite good fun, to tell you the truth. Why customers use us? We specialize in advice in mortgages and protection. And on top of that, because of our experience and expertise, we're endorsed by the Housing Association. So they like dealing with us, and that makes your journey quite simple, because we have a symbiotic relationship with them, i.e. we fit hand in glove, and we work, we're vertically integrated with the housing associations to give you guys a nice customer journey. What we do offer is a kind of bionic type of experience, where we are using a lot of technology right now, not so we don't have to talk to clients, but so the advisors can spend more time talking to clients about shared ownership and all the pitfalls of mortgages and all that quagmire of bureaucracy that you have to go through, and not wasting time filling in forms all the time. We specialize in our experiences in affordable housing, but especially in shared ownership. We started off with shared ownership, and we decided to specialize in that over the years. Our clients are always satisfied, otherwise we wouldn't still be around. And I like to think that we've won some awards that we've deserved over the time that we've been working, and we're quite proud of those, and goes to show what we've been doing over the years. What to expect when buying a mortgage? We keep our journey very, very simple. You go and find a home, view a home, you talk to the housing association, make them an offer, they accept it hopefully, and then you come to us. During that time with us, which could take 4 to 6 weeks, sometimes longer, we will take you all the way to mortgage offer, then to exchange, and then through to completion. There's a lot of bureaucracy involved in mortgages, so you need to be prepared on the way to buying a home. We'll hold your hand all the way from start to finish. We have people on the phones for you, by email, text, and our advisors are fully employed, only deal in affordable, predominantly shared ownership, and are experts in that field, and they're there to help you. When it comes to preparation, I always say to people, do your research first. You're about to spend £300,000 to £400,000, if not more, in London. It's worth going onto the website, typing in shared ownership and learning as much as you can. There's lots of videos, lots of things on YouTube that tell you all about it. You don't even have to read things nowadays. You can just watch it. And then learn about mortgages. They're not that difficult. The more you learn about this stuff yourselves, the easier it's going to be. Imagine you've just saved all your money, about to put it down on a deposit, and about to take a mortgage. It's worth spending half a day just in front of a screen learning about it as much as you can. But when you do start on a journey, first you have to go and find your home. And where do you find a home? Go onto websites like Share to Buy, like Homes for London, like Zoopla, like all these other sites. Have a look. Share to Buy specialise in shared ownership. Have a look and find out what you like. Find out the home you want to live in and find out where it is as well, because there's lots of properties out there. Once you've found out where you want to be, come to us, but start preparing your paperwork. Like I said earlier, there's a lot of bureaucracy. So you need to get together pay slips, you need to get together bank statements, you need your identity verified, i.e. if you have a driver's license, make sure the address is right, the current one you're living in. You need to be on the electoral roll. You need to bring together any deposits that you're getting from parents. You need that deposit verified by a solicitor to say that it's a gift. All these things help you in the journey to getting a mortgage, let alone getting the house, because especially over the last 6 months, getting a mortgage has got a little bit harder. But that's why you need to come to a broker instead of going direct to the bank, because we can help you with going to any other lenders. Right now, there are 29 lenders in shared ownership. So they've reduced significantly down to about 21 over the last 3 to 4 months because of COVID. But a lot of them will come back in. But all the big names are involved in shared ownership. And what you'll find is that the better your paperwork, the more you earn, the bigger your deposit, the cheaper your mortgage will be. But these are the type of things that we spend 2 hours talking to a client, usually an hour and a half to 2 hours, about the mortgage. So it's not something that we can cover here. But once you've got everything together and you found your home, if not us, go and find a broker that specializes. Even the lawyers have to specialize. And we'll be talking to the lenders on your behalf, along with the housing associations that we work with. We speak the language. We know during that journey, we need to be talking to lenders. We need to be talking to housing associations and obviously the lawyers. We'll sit there holding your hand all the way through, and so would any other broker. Go and find a broker that specializes. If you're not going to use us, use another a set of brokers that specialize, and let them do the work for you. You could go on the internet and you're looking to save a few £100. It's not worth it. Find someone that will look after you and help you along. With that, we'll also introduce you to the lawyers. Or if you bring a lawyer to us, make sure they specialize in shared ownership, because again, it makes your journey smoother. Many a time, we've had people come to us and then go off, find their own solicitor who doesn't specialize in shared ownership or affordable, and the whole thing just gets delayed. You found your home, you like to move in quickly, get all the right people on board, get the right team on board, and it'll be a lot easier for you. Once you found your home, get the right mortgage broker who can liaise with the housing association, get the right solicitor on board, it should be relatively simple. But these things aren't easy, but they are simple if you've got everything in place in the first place. Also, once you decide where to buy, there's a lot of information that you can get hold of at any time about finding out how your mortgage is coming along, and any questions you have. There's a lot of FAQs out there with different entities on the internet. What we have are different digital channels. We've got Facebook for news, Twitter for news. We've got an app where you can quickly find out how much you can afford. But you know, the disclaimer is it's not a full assessment. If you really want to, you can jump onto our portal and fill out a full assessment to find out exactly what you can afford. But the Censeo app is 6 or 7 quick questions to tell you roughly, can I afford to buy this and how much is it going to cost me? The first question you will ask when you go looking for properties. And you can follow us on the social media and see how it goes from there. Now, for more information, do look at the website, do look at our social media, and do research as much as you can on the internet to find out exactly what shared ownership is. You can't afford to make a mistake at this point, because if you buy something that you're not happy with, you're going to regret it. So I always say to people, do as much research as you can, find yourself the right team to work with, and then hopefully everything will be okay for you. Thank you very much.
Oh, hi, I'm just making sure that we've still got Matt here.
You do, hi.
Yeah, I think we're just missing your camera now.
There we go.
I'll leave you to it.
Lovely, thanks. Good afternoon, everybody. My name's Matt. I'm one of the partners from Alexander JLO Solicitors, and I also run the New Homes Department, along with one of the other partners. And we are specialists in shared ownership, help to buy, outright, and pretty much anything you can think of to do with a new home, a new build property. So I thought, obviously taking over from where Rupi was, I thought I'd just give you guys a brief overview as to how things are, and you know, basically just try and take you through what you can expect from start pretty much till finish. And when I'm talking about this, it's a very, very brief summation of what happens. But in short, as Rupi did touch upon, if you have the right team behind you, then that's all you really need. They will take the pain away for you. So I thought we'd start at the very beginning. And what do we do once I find my dream home? So, you know, as Rupi said, you've done your research, you've looked around the various property portals and property agents and, you know, direct with the housing association, you find the house that you want to buy. That's when you contact someone like Rupi. They will then make sure that you are financially affordable and you meet all the affordability criteria for this scheme itself. And at that point, you know that you are very likely to be able to get a mortgage offer. Now, obviously, nothing's set in stone in the current climate we find ourselves. But at the same time, you know, it allows you to then move forwards with confidence. So I would suggest going back to the housing association and telling them that you've met the affordability criteria and that you're interested in, you know, say plot number 121 or whatever it may be. They will no doubt ask you to put down a reservation fee. And also at the same time confirm to them who your solicitors are going to be. Now, what the reservation fee does is sort of acts as two things here. One, it shows your commitment to them to buy the property. The other, it acts as a consideration towards the agreement that you're making with the housing association. And that is that you will exchange within 28 days, which is the norm. Some housing association developers do 21 days. Now, when you're talking about exchange of contracts, that's when you're legally binding yourself to buy the property. A lot of the HAs out there, whilst they don't hold you to it, they do want some sort of commitment from you. And that commitment comes in the form of, if you do not exchange within 28 days, they will reserve the right to remarket. Now, it's extremely rare that this happens, because normally the reason you are unable to exchange in 28 days is because you've not chosen the correct team to support you. They aren't specialists in housing associations. They aren't specialists in shared ownership. As Rupi mentioned, you may well find lawyers, IFAs out there who come in at considerably cheaper than a recommended panel. Now, they are cheaper, but they may not necessarily be able to get you to where you need to be. So the best advice you can get would be to look at the recommended panel, whether that be IFA and solicitors. They are just recommended, nothing more than that. You don't have to take them, but they do know the development. They do know each other as well, such as I know Rupi, he knows me. They know the sales teams. They know the legal packs inside and out. They'll have probably dealt with these inquiries on plenty of other plots and other phases. So if you do hit a snag, they are best placed to get you out of that and move you forward so that you can try to meet the timeframes that have been set. So it is very, very important to choose the right lawyers, the right IFAs, because I think it's been said before that buying a house is one of the 3 most stressful things in anybody else's life. With the right team behind you, hopefully, that is not so much of a stress, and it is much easier, and it's much more of a, as we like to say, a customer journey and a customer experience, and they get you to where you need to be at the right time, meeting the right milestones, so you don't have those stresses thrown upon you. So in order to do that, you get in touch with a firm like myself. We would send out a fixed fee quotation to you. That normally goes out within 2 hours. I'd say shorter than that, but we try to make sure that everybody gets what they need within 2 hours, along with a welcome pack as well. Now, the welcome pack itself will set you up with everything that needs to happen so that you can instruct us. It literally lists everything you need to do in about as simple a way as possible. And the PDF's pretty much labeled complete and return, or for information, to give you a bit of the information on that side of things. Always make sure you're requesting a fixed fee quote with no hidden costs. The last thing you ever want is to be sort of hit with a load of costs you didn't know about. And then if you're happy with those figures, you're happy with the responses and service you've already received at that point, put their name down. Tell the association who you will be using, who you will be instructing, and that gets the ball rolling. The housing association will then prepare what's called the memorandum of sale, and they'll then issue contracts and leases. And at this point, it's when the exchange deadline will be set. Okay, so quite commonplace, and this is definitely what we request, and I would have thought it's fairly standard amongst many other solicitor firms. You'll be returning what's called a standards of client care, which is the general terms and conditions of engagement. Obviously, we discussed the fixed fee quotation. You must get that. They will likely request a form of upfront payment. For instance, we ask for £450. Now, this is a part payment towards the final bill. And the reason it is requested is because you may need to get things like searches, local authority searches, environmental searches put in place. Now, if that is the case, what it means is having this money now is that we can just deal with it as soon as we're able to. So on receipt of the plan. Now, if you don't do that, it makes it very, very difficult, and it slows everything down. So we make it a firm principle. It forms part of instruction for us. And then there are other items which Rupi's already touched upon, such as getting effectively your papers in order. So getting your ID certified, getting together your pay slips, getting together your bank statements. Now, these things are something that your mortgage advisor will require. We also require it too. The thing is, we will probably need a fair amount more than most of the other people that you've already given it to. But that said, get the people you've already given it to send it to us. It will save you having to duplicate it. And again, it will save you time. Proactivity at this stage is the most important thing for you guys. So just get everything you can, get it all done, and get it all sent over to the lawyers and let them sift through it and come back to you if you need anything further. So once you have instructed, I've put together a brief overview of what you would expect. Now, this is a really simplistic snapshot of what's going on. Obviously, you are at the bottom, we're at the top. It's nowhere near as simple as this, but it gives you a bit of an idea as to what's happening. So once you've instructed us, that's the bottom left, we have received that, and then we contact the seller's solicitors to confirm that we are instructed. They'll release the draft papers to us. We can then request searches because you paid us some money, and we'll end up going through the entire legal pack, contract, lease, the development, plot, plans, everything there is that we've got sent, and we'll raise our set of inquiries. We try to limit those, obviously, for speed. But in actual fact, in all likelihood, we'll have probably raised these previously on a different plot, so we can just reapply them. That saves so much time you wouldn't believe. So again, this is why instructing somebody who knows what they're doing, who's already dealt with this development, is very, very important. Because once one set of inquiries are out the way, there is no reason why it shouldn't be reapplied. Well, there are many reasons, but in theory, on the same phase, it should be reapplied, and it hopefully would be able to be reapplied. Once those inquiries are resolved, we will then put together what's called a report on title. Now, the report on title itself dictates every single legal aspect of your property purchase. It takes you through every document, starting with various items like the contract, moving into the lease, all the way through, through the mortgage, through the searches, and picking out the key points. You are provided with all of the documentation as well, but obviously there is a significant amount, and most of it is in legal jargon. So the report sort of tries to distill that into an easier read and highlights some of the major points that you may want to actually be aware of. I would always suggest you take a fair bit of time. I say fair bit of time. There isn't an awful lot of time in this process, but I would say at least 2-3 days to read through everything. Raise those inquiries with your solicitors that you need answering. You've got to go into this with a clear conscience. At any point up to exchange, you can pull out. Once you've exchanged, it's extremely unlikely that the seller would ever allow you out of that contract unless there are material changes to your situation, but it is extremely risky. You are potentially losing your deposit if you try and pull out after exchange. So it's vital that you read through this and raise any inquiries you feel you need to. At AJ's, we try to report to our clients 13 days ahead of the exchange deadline. That would, if it's a 21-day exchange deadline, give you over half the time to review and deal with everything. This, again, is very important. So make sure that you are getting what you need so that you can deal with it at this time. Once you have dealt with all your inquiries, and again, I'd always suggest that you put these inquiries into one email or one document. So build it as you go, so that when we respond, you only get one response. If you don't have that, it could lead to a bit of confusion later down. You've got 20 odd emails all dealing with different things. It may not necessarily be as easy for you as it should be. So try and take a bit of time just adding it all together. Now, I keep saying take a bit of time. Obviously, in a 28-day exchange period, there isn't an awful lot of time. But if you are proactive and you do things as and when you are requested to do them, you will find time within that short space. Once you're happy, all we require at AJ's is your deposit and an emailed authority, and we can sign the contract on your behalf. Once we've received those, we've approved your source of funding for money laundering purposes, and we've received certified ID, all things that could have come from other parties that you've already provided them to, we then move to exchange of contracts. Once you've exchanged, you're legally bound to buy the property, and the seller is legally bound to sell. If you then don't complete, you would be in breach of contract, and the fallout for that is quite negative. So as your legal advisors, we would do everything to make sure that that doesn't happen. When you're exchanging, you do need to either, if it's a property that's already been built and you can move in and they're offering what's called a fixed completion date, you would need to agree the completion date directly with the seller. This can be done through the legal advisors or directly with the sales team. We would suggest the best way of doing it is with the sales team first, because you can have a real-time negotiation as to what you want. Once then it's agreed, you tell us, we confirm it with the seller solicitors, and it's agreed. That's written into the contracts on exchange. We would always urge you to go with a minimum of 10 working days between exchange and completion, but we do understand that that may not be practical for yourself, nor for the seller. But the absolute minimum must be what the lender can guarantee to release the funds. This is quite often 5 working days. So you do need to bear that in mind if you're trying to meet certain timeframes that you've set yourself. One thing we always say is never, ever set any artificial deadlines or timeframes, because certain third parties may not be able to meet it, especially in the current climate. If you're exchanging on what's called on notice, that means that you're given an anticipated completion date at some point in the future. It's purely because the property hasn't been built yet. Now, you won't know, and neither will your legal advisors know, exactly when completion will be until notice to complete has been served by the seller solicitors upon your legal advisors. That then triggers a completion timetable. It's usually 10 working days, but in some instances it can be 5. So as soon as that is received by your solicitors, it will be all guns go and everybody gearing you up for completion. Hopefully by this point, you will have already taken care of everything that is required for you, including all the signed documents. So it will just simply be a matter of getting the funds over to your solicitors. We request funds from you and from your lender, because we deal with the lenders on your behalf as well, the day before completion. Now, this does mean that you will start paying interest on your mortgage a day early. However, it prevents the likelihood of a breach of contract for a delayed completion. If we weren't to request the mortgage funds or your funds until the day itself of completion, there's no guarantee as to when we would receive them on the day, which then may mean that there would be no guarantee we could even get them to the seller's solicitors in time for completion. We always request the day before, because that way we can tee it up to be sent first thing in the morning. Unfortunately, again, on the day of completion itself, we've got no control over the banking system. Often the banks, because of the large amounts of money being transferred, do stop it to do final audits and further checks that we are not aware of. So it may mean that, unfortunately, the money may not credit the solicitor's accounts for the seller until later in the day, sometimes even as late as 5:30, 6 o'clock. Unfortunately, there's very little that can be done on that. So as a solicitor speaking on behalf of all solicitors, please try to give us the benefit of the doubt. It's often the case that it is not down to us, and it is down to the banking system itself. So whatever you do, don't book removal men to be there at 9:30 in the morning, because you may not be completing. As soon as the funds do credit the seller's solicitor's accounts, they will contact us to say they've released keys, at which point we will tell you and ask you to contact the sales teams to go and collect your keys. And at that point, you will have moved in and bought your property. My team, the client care team, and various other members are always on hand should you wish to discuss anything, as am I. So if you do want to discuss anything further, please do just drop us an email, or if you'd like a fixed quote, please do let us know. Other than that, I'm going to pass you back to Jade.
Thank you so much, Matt. That was really great. We're going to bring in Rupi again as well. Perfect. Thank you. That was all really informative. You covered so much stuff, and we're going to jump straight into the Q&A section, because we have had tons of questions. It's unreal, especially on kind of like affordability and a lot on the mortgage side, Rupi. So we're going to keep you busy for a little while now. We'll go in with about deposits. We've had quite a few about this. So basically, what size deposit do I need if I want to buy through shared ownership? One for you, Rupi.
There's a building society out there, Kent Reliance, will give you 100% mortgage, but most housing associations like to see people with a little bit of skin in the game. You can go from a 5% deposit onwards, 5, 10, 15. Right now, though, as you might have read in the papers, the small deposits and high loan to values aren't that easy to get hold to administer. So really, right now, and I think it will change in the next few months, or hopefully in the future, a 10 to 15% deposit usually kind of makes sense for most people.
Okay, perfect. Yeah, that kind of leads on to my next question. We've had a couple of people asking along the lines of, are there actually any lenders at the moment that are still accepting 5 to 10% on shared ownership?
There are lenders out there accepting 5 and 10% deposit. The problem is, does it stack up with your rental that you have to pay for shared ownership, and does it stack up with your income multiples? So it's all about affordability. What we find, especially in London, is affordability can be relatively tight. So most people have to increase their deposits. So it will really, there's too many variables to say, yeah, 5% deposit will buy you a shared ownership property of your dreams. It really depends on what your income is after you put the deposit down to cover the rest of the costs.
Okay, fantastic. So Matt, we'll pop over to you for this one. A few people have been asking what's the difference between leasehold and freehold. I know that's probably quite a big question, but if you can give us a bit of a brief overview.
It is quite a big question, yes, but I'll try and keep it short and brief and to the point. So effectively, a shared ownership leasehold property has its rules, obligations, commitments, financial arrangements, and pretty much all other things such as covenants, which are basically promises you're making contained within a shared ownership lease. That has an agreement, obviously, between yourself, the housing association, as to how the property itself will be governed. Shared ownership leases are their main form has to be in that of the HCA approved version. I mean, they do allow for some sort of some variations, but obviously the solicitors involved will be making sure that they do adhere to the HCA approved lease. Effectively, the lease requires you to pay, well, the shared ownership lease will require you to pay things such as specified rent, which is obviously the rental amount that you are going to be paying to the partner you're buying with. General leases will also have items such as service charge and various other items that you will be committed to dealing with. And so what happens is that will stay with you, from the moment whether you're buying a smaller share. And then once you staircase to above 80%, well, sorry, up to 100%, then potentially either the shared ownership aspects of the lease will just simply drop away, such as the specified rent that you need to pay, or if there is a superior lease, which again is a bit technical, and these are things that your lawyers would take you through in the report Untitled that I spoke about, the shared ownership lease would drop away and you would enter into the superior lease. Or there's a third version, which is the freehold. So a shared ownership lease could lead you into buying a freehold. So it's extremely unlikely in London that this would be possible. But outside of London, you can get shared ownership purchases where you're buying a part of a house. And once you staircase to 100%, effectively the shared ownership lease drops away and you become the owner of the freehold itself. Now, a freehold property is not governed by a lease, it's governed by a transfer. So what that means is you're owning the house and the land, and the actual conditions imposed upon you with respect to what you can and can't do with that house are a lot less restrictive, because effectively you own the house. And I mean, to be honest, I would say, let's also discuss, there would be no service charge payable on a freehold. You would be paying potentially ground rent, things like that. But also, again, it just depends on the setup of a development or of the freehold house itself. But that's it in a nutshell. I can't really go into much more than that unless I were writing a paper for my law exams again, or I had much more specific examples to discuss. But obviously, if it were to come up in a purchase, then this is where a report on title would come, or where we'd be able to help on an individual basis.
That's great. And I think it's good to touch on what you did there, which is, if you're in a shared ownership house and you do buy 100%, there is the potential of buying out the freehold. But again, it's always a matter of talking to your housing provider, your association. But I think where there's sometimes some confusion is the freehold on apartments, because actually, regardless of tenure, you can't be the freeholder. I think if you're in a block of flats, you will always be a freeholder because, there's all these other properties surrounding you. So it's kind of good to differentiate in those early stages what kind of property you want to buy. Because if you want to end up owning the freehold, your best bet would be to go for the house.
Well, just to pick up on that point as well, this is again why it's got to be such a narrow view of what we're talking about. Any block of flats, there is always a potential to buy the freehold. However, in reality, if you're talking about a block of flats, the valuation of the freehold would be quite high, should we say, millions and millions and millions and millions of pounds, and you would need to get a large percentage of those leaseholders to all band together to come up with those millions and millions and millions of pounds to then buy the block of flats and convert it into freehold. So again, it's a bit of it's such a broad topic that it doesn't really bode well for when we're discussing shared ownership. But again, it's a common question. I've been told I can buy the freehold for my block of flats. I'm like, well, you could if you can get I think it's over 55% off the top of my head of the other lessees, and you have millions and millions and millions of pounds. It's not possible really for the vast majority of us out there.
Okay, that's all really good stuff to know. Rupi, we'll pop back over to you for this one. A very topical question. Quite a few people mentioning that they're on furlough, and will they be able to actually get a mortgage while kind of in that situation?
See, 3 months ago when furlough started, there were quite a few lenders, especially in shared ownership, that will take a look at mortgages if you were furloughed. What we found over the last couple of weeks is more and more the lenders are saying, yeah, we don't mind giving you a mortgage on furlough as long as you're back at work after it. So and some are even going to the extent of saying, we want you.
Oh, sorry, Rupi, I think we might have lost you there. Oh, gosh. Okay, Rupi's dropped out. He might be coming back. If not, we'll carry on going through the kind of legal questions with yourself, Matt. What we'll do is we'll pop over to you again for now. Oh, Rupi, hello. Sorry, we lost you there. So if you wanted to pick up on your question there, that's not a problem. Oh, can you hear us? I don't think Rupi can hear us. So Matt, I'm going to come back over to you with a couple more legal questions.
Yeah, no problem.
How does stamp duty work out if you're only buying a 25% share of a shared ownership home?
Sure. So stamp duty you can elect to pay on the share or on the full amount. Now, if you elect to pay on the share, you pay stamp duty on the percentage that you're buying, and the specified rent does partly come into this, but again, it would be down to your legal advisors when providing you with a quote to specify the two options. You would then not need to pay any more stamp duty until you staircased above 80%, at which point the full amount becomes payable. Now, as for a decision between whether you would want to pay it on the share or on the full amount, this is a question that you'd have to ask yourselves or a specialist tax advisor. We've seen a major shift since the announcement came out from the Lord Chancellor that with the £500,000 exemption to stamp duty, now the majority of people who are looking at completing before 31st of March are switching from where they would have previously and historically paid on the share to paying on the full amount, because it's £0 whether it's the share or the full amount, provided the property is below 500,000 and it's completing before March. Obviously, if you were to complete after that, or the property was above 500,000, this is when you need to seek specialist tax advice, and it's not something a lawyer would. Well, I mean, I certainly wouldn't be happy advising you on that.
That's great. As long as people know kind of where to go with those questions, that's really helpful. We've also had an interesting question here: is with legal fees, do they need paying in full, or is actually an option to pay them in instalments?
Sure. That is, I mean, I would suggest that's pretty much down to the law firm. It's quite unusual to be paying it in installments. Normally, all funds are paid prior to completion. Also, it depends how you wanted to pay. I mean, obviously, it would be feeding back into the affordability, I would have thought, and Rupi, I'm sure, would have probably picked up on it if he wasn't here. But the thing is, realistically, for shared ownership purchase, our full legal fee is around £1,000 or thereabouts. I would say we're very competitive, and at the end of the day, I think it's quite commonplace that clients will be paying a lot more than that when you take into account things like apportionments of specified rent, apportionments of service charge. So if you're finding it difficult at that stage already to think about what it will take to buy the property, you do for things like legal fees, you do then need to sort of consider the actual effect of what will happen, because you may well need to pay a month or 2 months in advance on rent and service charge. So again, it's not really answering the question. I sound like a politician. I don't watch too much of the MPs recently. At the end of the day, it would be down to the individual legal provider as to whether they would do it. And I'm sure certain arrangements could always be made. But again, you'd need to be really considering, yourself, whether it was right for you, to be honest.
Okay, great. I just want to check if Rupi's back. So I can see he's in the room, but I just don't know if his audio is playing up a little bit. With the fact that he hasn't replied, I'm going to assume not. Matt, sorry, you're going to keep talking for us.
That's fine. He's done this to me before.
One that's come through is when we mentioned kind of the lease and the leasehold, is some people are asking how long those shared ownership leases generally are.
Sure. So look, standard shared ownership lease is between 125 and 250 years normally. You wouldn't want it less than about 125 because lenders start getting a bit twitchy when leases run down to around, below 90, definitely below 80 years, and you need to start looking at lease extensions. So the starting place is normally around 125. This is if it's outright. If it's a resale, then it's a very good question, and it's something that your solicitors should be looking into on your behalf, because again, you don't want to be getting into a position where you're buying a property and then all of a sudden you're finding you have to apply for a lease extension, because that can add extra cost you may not have thought of. But for a new build purchase, it's around 125 to 250 years.
Fab. No, that's really good to know. And especially kind of going into that, resales are very popular even on our website. So knowing to keep an eye out and actually see what the lease is on the place at the time, because it doesn't start from a new, then the lease carries over with each buyer.
Again, if you've got a specialist in shared ownership who also deals in resales and staircasings and all the rest of them, much like we do, you would be looking at this as part of your standard inquiries in any event. And with the resale side of things, in all likelihood, all of the leases would be renewed at roughly the same time, if not exactly the same time, by the housing association. So again, through that, there may be discounted, preferential rates for it. But at the same time, it's something, if it were to happen almost immediately after the purchase, you would be looking at potentially the seller to say, well, why am I paying for this? You should be. They may not, you don't know, but it's definitely worth bearing in mind.
And just checking in again to see if Rupi's back, because we do have a load of mortgage questions. But I'm going to say that's a no, I'm afraid. What I will say, guys, is if your question was mortgage related, don't forget you can actually contact Censeo directly. Oh, yeah, we've just completely lost Rupi now, I'm afraid. I mean, there's a certain level of stuff here that is just asking about kind of affordability. So I know, Matt, this isn't so much in your kind of area, but we've had questions like, sorry, I'm losing my voice. I've been doing a lot of these webinars now. I'm finding that I don't meet the minimum income requirements that are outlined on certain homes, but I know that I can afford the monthly payments. So that's something I can kind of roughly touch on, but not in the kind of the way that Rupi would be able to. And honestly, a lot of it will just be dependent on your kind of circumstances. So these minimum income requirements for homes will, oh, I'm just answering one of your questions, Rupi.
I'm back. Don't know what happened there.
Don't worry, I'll pass you every question in a second. Pretty much in answer to that one, yes, it all depends. So every house or development will have these kind of income requirements specified, but it's always worth making those kind of inquiries with housing associations, having your financial assessments done, because as I was saying, Rupi, minimum income requirements can vary, depending on if you have a partner buying with you or if you have a higher deposit and stuff like that. So potentially you can still get those properties that you think might just be a little bit out of reach. Yeah. I'm not a mortgage advisor. Rupi would have way better at explaining that than me, but I will chuck you a question. Let's have a look here because we've had loads coming in from you, Rupi. So we do have a fair few questions coming in surrounding bad credit and how that affects the mortgage process. Would you care to elaborate a little bit on that?
So before you go looking for a mortgage, it'd be worthwhile going on to Experian or one of the other sites like Credit Karma to check your credit report, because bad credit doesn't help, but it depends what the bad credit was there for. If it was a missed payment on a mobile phone bill, a lot of lenders will take a view. If you've never paid a bill at all and you've got a county court judgment, you're going to have problems. So first and foremost, bad credit doesn't help. There's not many lenders out there that will help you if you haven't managed to pay bills in the past, but get a copy of your credit report, go through it, and you'll see on there which, if you do have impaired credit, what can be fixed, and talk to a mortgage advisor and say, look, I've had this impaired credit. What do you think? What are the chances of me getting a mortgage? And how long could it be until I do come to apply for a mortgage? And they'll help you along.
Fab. And we'll chuck you one more question, Rupi, before we have to call it a day, I'm afraid, which is, can I only borrow up to the value of the share I buy, or can I borrow to cover legal fees and other costs as well? So actually, this could potentially be between both of you.
Some lenders will let you have free legals, free valuation fees, and add it onto the, or they'll add some of the fees onto the loan. So typically you'll have a broker fee, you'll have a lender fee, it might be £1,500, £1,000, that could be added onto the loan. Legal fees could be free sometimes, and valuations could be free. It really depends, but usually they'll only lend you what you need to borrow for the share. But
if I may also just jump off the back of that, and I'm sure our friends and housing associations and developers will not thank me for this, but there are some people out there who do offer incentives as well for choosing panel. Now, it's not meant as a bribe to go with their favourite bud. We don't get any kickbacks whatsoever from the housing associations. It just goes back to what both Rupi and I have said about getting your your team, and the best team in place for you to take you through this. And what the housing association gets out of it is comfort that they are going with somebody that they know knows what they're doing. They know the development, it goes back to what we were saying before. So for that luxury, some, and not all by any stretch, but some of them do occasionally offer legal fee incentives, IFA incentives, things like that. So, it's definitely worth an ask. Please don't say I suggested it, because that's the surest way I won't be working with them anymore. But it's things like that to just bear in mind. And I'm sure you'd probably see that being advertised on their own websites, stamp duty paid for. Well, it's because there is none at the moment. So, it's an easy win there. But just, you don't get if you don't ask. So just speak to them first and see what you can negotiate effectively.
Yeah, that's a really good point. And actually, it's not even necessarily just the fees that often are part of the incentives, but I think I mentioned in our webinar yesterday about cost. It can also include like show home furniture packages and stuff like that. So exactly what Matt said is just always worth checking and seeing if they do have any kind of incentives available, because it's every little helps, especially for first-time buyers. But for anyone buying a property, it's a big expenditure regardless. So always keep an eye out for those kind of little deals that you can get as well. But I think we're going to have to call it a day there, guys. Thank you so much. And I'm so sorry that we lost Rupi along the way there. But I want to say a massive thank you to both Rupi and Matt for joining us today. And a thank you to everyone who tuned in and asked such amazing questions. We really hope you found the session useful. And like I said, if you have any more legal or mortgage questions, feel free to contact AJLO and Censeo Financial directly as well. And I'm sure they'll be happy to help. As I mentioned earlier, Shared Ownership Week 2020 actually wraps up tomorrow. But you can still find tons of information on their website. Plus, they're going to be running a really interesting event from 1 p.m. tomorrow, where TV presenter Johnny Irwin will be joined by a number of housing experts, including our very own Rupi, all in one socially distanced room to help answer any remaining questions that you have. So if you're interested in registering for the event, please head to sharedownershipweek.co.uk. And that's pretty much a wrap from us for now. So thank you again to Rupi and Matt for joining me. I'm just thinking, is there anything else I need to let you know? All of the webinars that we've done over the last week, we're actually going to be sending anyone who's registered links to watch them again after all these sessions have run. So tomorrow you'll get an email with all of the links, and you're welcome to rewatch them and take any notes. And you're welcome to contact any of our speakers, housing associations, mortgage advisors, solicitor services with any further questions. But that's it from us for now. Thank you again. And until next time, keep safe and have a lovely evening. Bye.
Thank you. Bye.